we await the pricing of the Blackstone IPO, the world of power and money is in the crosshairs of Congress. As we have been reporting, Representative Henry Waxman is asking the Securities and Exchange Commission to block the IPO. He's saying slow it down until after Congress conducts hearings on the industry and Blackstone. Plus, the New York Times reports lawmakers are considering a new and more far-reaching proposal to end tax breaks for private equity firms and hedge funds. My next guests disagree on whether these plans are on the right track. Joining me now to talk about it is Robert McIntyre, Director of Citizens for Tax Justice, along with Nicole Deese, attorney at Schutz & Bowen. Nice to have you with us. Welcome to the program.
Thank you.
Thanks.
Let's begin on this idea that the IPO should be slowed down. Robert McIntyre, where do you stand on that?
Well, I don't care that much about it, but I'd say this, that whatever happens with the IPO, Blackstone should be on notice that it's not going to be able to use its tax shelter anymore, even if it goes forward now.
Nicole?
There's nothing that's changed. The risks of the IPO have stayed the same. And, you know, the SEC has undertaken a thorough review. They're continuing to undertake that review. So unless something had changed with regards to the IPO, it shouldn't stop.
All right, well, let's talk about the taxation, though, of private equity. This is an issue that certainly has been gaining momentum for some time now. Carried interest is something that everyone is focused on here. Do you look at carried interest more like wages and salaries, or is it like investment? Nicole?
It's an investment. You know, these managers are being paid based on their performance. The more value that they create of these companies, the more that they're paid.
So you're calling it capital gains, and you're saying that that should be taxed at 15% versus 35%. Do you agree, sir?
Absolutely not. In fact, Blackstone doesn't agree. In its SEC filings for the IPO, they make a big deal about the fact that they are not an investment company, that they are, in fact, fee for services, for management advice, for financial advice, that it's all earned income, and that's the way it ought to be treated for taxes. They just want to have it one way for SEC purposes and another way for Internal Revenue Code purposes. They're right with the SEC, and that's the way it should be treated.
Well, what about the idea that public partnerships should be allowed to be taxed as partnerships under current law as opposed to corporations? How do you justify that, Nicole?
They're already being taxed at the corporate level. These private equity funds are buying corporations, operating companies that are taxed at the 35% tax rate. You're talking about then taxing the partnerships at the 35% rate, plus an additional 15% on any dividends returned to the managers. So you're talking about triple taxation.
Triple taxation is what Nicole says. Sir, I know where you are on that issue, but let me ask you this. What if we see higher taxation on private equity, push these firms offshore, adding to this upset that the U.S. is losing business to international economies?
Well, first of all, as long as we have Americans operating them, and I assume these managers want to remain Americans and not renounce their citizenship, then they have to pay taxes in this country. They should be paying at the regular personal rates. This idea of taxing the partnership as a corporation is a reasonable backdoor way to get the same answer. But the point is that moving the company offshore does not relieve them of their liability for taxes.
Nicole, what do you say to the idea that private equity executives are taking advantage of the tax havens that they have had for years?
They're absolutely not. All they're doing is taking advantage of the rules that have been in place for several years. The rules exist as they are, and they've just been using them the way that they're written. And we're talking about changing the way these rules were written, all in an election year, because it makes good press.
What's your gut? You think this is going to be this will pass and become law?
I think in some form it probably will. I don't think it's going to be. I don't think you're going to get the 35% ordinary tax rate, but I think in some form an increase will happen.
Robert?
Oh, I think it's going to pass, and you can see it around the world. The British are debating the same thing. The Germans, I spoke to one of their ministers today, and they're debating the same thing. So it's all over the world. People are waking up to the fact that these guys are making hundreds of millions of dollars a year, and they're paying taxes as if they were making $20,000.
All right, we'll leave it there. Good to have you with us. Thanks so much for weighing in on this important topic. We so appreciate it.